top pick number one, Salona Global Medical Device. It's SGMD on the venture. What are they all about, Bruce, please?
So they're in the recovery science market. So if you think about what that is, that's when you go to your physiotherapists and they have, a number of different machines and technologies that help you recover from either an injury or from surgery. And those are two things that don't stop because the economy slows down or we have COVID or anything like that. This company started just a little over a year and a half ago. At that point in time, they had around $15 million in revenue. They've grown that to a little over $50 million in revenue right now. With what they have in the pipeline, they're anticipating that they're going to end the year with about $80 million in revenue. They're profitable. They're founded by a gentleman who's done this before. So he had a company that he took that was in the similar space, and over a 6-year period, he took it from about $150 million to $1.5 billion, sold it out to one of the big private equity firms. And now he's put his team back together, knowing what he knew from before and doing it all over again. This is an example of what we talked about earlier, where the business is doing phenomenal, but the stock price isn't. And it's an opportunity that exists, I think, that allows investors to get in now. If you want to be patient, Les Cross and his team are going to do exactly what they did before.
Relic Health Technologies, RHT, on the venture. Remind us what they do, Bruce. I know you've been following this stock for a while.
We have, you're right. Yeah. So if you remember what they do, they have a software solution that ties in a bunch of different monitoring solutions or monitoring hardware that allows patients to be monitored and reviewed by their doctor, their family, whoever that is, while they're in their home. So that could be, diabetic, that could be blood pressure, that could be a number of different ailments. This is a company that's taken a lot longer to get to where they are now, but they're now at that inflection point. So if you look back, they just reported their earnings for the end of the year, and they did $8.5 million in revenue, up from $1.5 million the year before. But if you look at what they said when they did this announcement, is that they expected to be at the end of this year, they expected to have 100,000 patients enrolled and on their system, and they generate about $50 per month Canadian for each one of those patients, with probably, I'm guessing, around a 50% margin. So you sort of do the numbers and you go, oh, wow, like they're going to have some really nice EBITDA at the end of, kind of starting at the end of this year, moving into next year. They're going to continue to add to that. The stock, the president of the company has already talked about, or the CEO, she's already talked about the fact that, they would look at doing some type of buyback with the cash flow that they have, and they'll continue to add on. I think that, probably at some point in time becomes a takeover target. What the market's looking for here is really, to prove and to show that they're able to do this, because in the past they've had a couple of false starts where they thought they were at that inflection point and they haven't been. So it's one that we have owned in the past. It was a top pick in the past, and now we've come back to it again. We've just bought back in, and we think that the next couple of years could be quite interesting.
And finally, Green Thumb Industries, GTII, on the Securities Exchange.
That's right. So this is one of those cannabis MSOs down in the U.S. And if you talk to most people who are really familiar with the sector, this company has probably one of the strongest teams in place. They have some of the strongest assets, and they're in some of the strongest markets. So again, this stock is down on the year, but in the last few months has been starting to come up. If we saw any type of regulatory changes, that would certainly help. If we saw any type of structural changes where some of the institutional managers could come back into and own these MSOs, and that could happen as a result of what Canopy has proposed as far as structure goes, then these stocks would be trading at a lot higher multiple, and we think that their underlying business also continues to grow.
Is there, though, a risk that I know this is a huge, you'd have to generalize here on a huge scale, but is there a risk America will also see a glut of cannabis as we saw in Canada?
It would certainly be possible down the road, but to start with, if you look at what they've done is because each state is state by state, a lot of those states have, fixed number of licenses for the state. There's certainly some states that hasn't been the case. So California is not like that. Washington State, Colorado is not like that, and it's more challenging. But if you look at some of the other, states, like if you look at, Illinois or Florida, those are limited limited license states, and the participants who are there, the companies that are there, have done really well if they've been able to build out a business.